Hello and welcome to Pro Trader Strategies Market Commentary for Monday, September the 17th. My name is Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, and for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that I talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. And remember, the past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's talk about some economic data across the pond. We got European final CPI, which is Consumer Price Index, came in line with expectations at 2%, and final core Consumer Price Index came in at 1%, expected to be 1%. Back here in the United States, it being Monday, there's not a whole lot of economic data, guys. We got the Empire State Manufacturing at 19, expected to be 23. So one of the first times we've been seeing these data points miss on that number. So, these manufacturing numbers have been hit or miss lately. Some of the others we're seeing a little bit of pullbacks. So therefore, I would expect the Fed to not really start continuing to increase interest rates at this point. I think it's time to take a pause. But that's my soapbox, and I'm sticking to it. All right, crude oil futures in 69.09 right now, up about 10 cents, pretty much unchanged for the most part. But one thing to note is we got the 50 Fibonacci right there. We did settle below that on Friday, and today pushing up against it earlier this morning, easily cut through it. But right now we're below that, so it's going to be a pretty interesting settlement today below that line. Would make me believe that it's going to want to stay right here around the 67-ish mark. We get above that, we're going to stay in the 70s for a little bit. But right now, I think that demand and things of that nature is going to be starting to wane a little bit, and that's going to be downward pressure for crude oil inventories. Or crude oil anyway, as inventories rise, or they try and just change it over into a different bucket where nobody's looking. All right, gold futures managing to be above that 1200 mark. We talked about that on Friday. Would want to settle above there. The bulls are going to try and defend that. There's no real line in the sand here where there is a bull or a bear winning. It's just that 1200 mark, which is a psychological level really more than support and resistance any other way. We've got Bitcoin futures coming off quite dramatically today. There's a lot of talk over the weekend that I heard that Bitcoin was dead. It's not too far away from that, to be quite honest. You can see if we looked at this as a heart monitor, it's slowly flattening out. Needs to have some kind of catalyst to get some interest back into this cryptocurrency. All right, bonds finding a bit of a bottom. Remember, I keep talking like this. Interest rates, I don't believe, are going to continue at the pace that we've seen on an upward trajectory. Therefore, bonds are pretty much priced in. We've talked about it when it got a little overextended to the upside. Now I think it's gotten a little overextended to the downside, meaning interest rates predicting too high of an interest rate in the near future. So I think that it's a little overdone to the downside. I think we're going to migrate right back to that point of control as we get overdone. I'm not going to play this to the upside. I'd much rather play my bonds to the downside at this point because that is where the risk is. Therefore, I'm not going to play any small bounce just in case something crazy comes out and really extremely good economic data could cause that mentality or that market assumption to change on a dime. So I'm not going to play with it. All right, Dow Jones Industrial Average probably having the best day of the equities, only down 7 points on the day. That being said, could be more of a flight to safety as they're pulling out of the tech stock and into the bonds, or into the, that's usually the flight to safety, but into the more blue chip stocks, I should say. Now, something to say here, I've gotten really long deltas in my portfolio. I'm bullish right now. I think the economy is doing pretty good. I don't want to see a bubble or anything like that. I don't think we're seeing that. I think we're seeing a nice trajectory of strength in the economy. Therefore, I've been bullish in equities, and I'm really long deltas, which is making me a little bit nervous. I'm never long deltas. Finally, bullish in the markets. We'll have to see. But that Apple trade's not working out too well that I'm going to have to play around with. But let me finish up with the Dow Jones being down 16 points on the day. NASDAQ suffering the worst, as I was talking about, down 71 points on the day, making it look very toppy and a confirmation. Like I said, I'm still a little bit bullish here, staying above this 61 Fibonacci. As long as the next couple of days hold this, then I'm going to stay in my SPY, but I'm very close to covering just about every long trade I have due to these market setups with the confirmation in the Dow, the NASDAQ, and the E-mini S&Ps. Just a tweezerish top looking here. We've got a confirmation of a top here. I'm long deltas. All of those things do not really make me very settled or very sure of my positions. So I'm going to be playing around with those today for the most part. And I keep adding more long deltas. We'll talk about that here in a minute. So as you can see on the opening with the economic data, we kind of slammed down to the lows of the day. We're starting to recover a little bit of that as people are probably covering some of their shorts and things of that nature. That is a key for a bounce here. I don't think that there's been that bad of economic data to really push this market down, more profit taking. All right, well, with Amazon, we broke down here. It did get up into that 2,000 mark for a short period of time. We slammed down today. We were really massively down when I decided to put on this trade, and I had to actually start chasing it. I didn't get, obviously, the low, which it never ends up happening that way, it doesn't seem like. But went to that 16 delta trade and did the October, sold the 1,725 puts in there. I was looking at the 75 puts, which the 1775 puts, what did it line up with? I think it was just below this volume node here, so I was thinking that would have been pretty nice. Had a low volume node here that would have passed down. I would have gotten in a little bit of trouble, but collecting enough of a credit to get me at least to this volume node. So I didn't throw up any Fibonacci's. I was just kind of looking at the volume nodes here and decided to go with the 1725s because I'm able to collect that nice fat premium that gets me at least right around this volume node as a support and resistance if it decides to get down there. I don't think it's going to really break below this 50-day moving average at this point. I think Amazon's doing very well. They're not going to get broken up anytime soon. So Amazon short-term pullback. I think it's an opportunity to get some long deltas in Amazon. Now that makes me overall very long in my deltas. That Apple trade that I talk about not working out. Probably should have covered it a couple days ago when I talked about it. I was all excited to put the trade in there for about 50% of my max profit. It's gotten back to almost unchanged. Never got to that 50% mark, but when it happens in 1 or 2 days, I probably should have covered that because I destroyed the odds. Beat the probabilities like there was no tomorrow. I've waited a little too long, and that's why we stick to those rules and do that. I tried to wait for a nickel and lost about 50 cents on this trade. So that's why we should have covered it, Eric. All right, so anyway, writing that down in the book, you tried to wait for 50%, and I didn't get it. Therefore, I didn't get the trade, and it's now not looking too great. It's still profitable, but not nearly as what I was looking for out of that trade. So that's about it right now. Keeping an eye on this. I might be covering this Apple trade pretty quickly today. If anything goes bad, SPY is another one where I have long deltas. I'm long those calls in SPY, if you remember. And I am short calls in Apple. I'm short puts in Apple. So all of that stuff playing to the upside. I don't know, making me too long deltas that I might start covering some of those just to neutralize my portfolio a little bit better. All right, that's about it for today. Other than if you can't take that, take it easy.